In 2024, there have only been 2 new positions that I've added to my portfolio, and one of those positions was Louis Vuitton, stock ticker LVMHF, currently trading at $765 per share. If we jump over to my do-it-yourself investor toolkit and blow up this growth chart, you can see over here, this is a position I'm currently up about 8.77% on. Now, if we jump back over to Seeking Alpha, we can see over the past year, they're down by about 17.3%, and earlier this year, they were trading as high as around $952 per share. If we look at them year to date, they're down by about 6%, and then in the past month alone, down by 9.26%. Now, in my opinion, I personally think this is creating an opportunity. Now, if you don't know anything about Louis Vuitton, this is a company that provides luxury goods and luxury products. For example, if you go over to the website of Louis Vuitton and scroll down, we can see some of their best-selling handbags. These are handbags that could cost anywhere from $2,000 to $3,000. They have ridiculous price tags. So these are goods that are considered highly valuable. Now, what's impressive about Louis Vuitton is they built a portfolio of 75 different luxury brands that generate roughly $90 billion in revenue as of last year. Now, when we think about luxury goods and luxury brands, one of the things we have to keep in mind is supply and demand. If supply is too high, the price point for those goods is going to go down. But one of the things we can see about Louis Vuitton is it fully controls its very own distribution. Now, what does this mean? Well, since they fully control their own distribution, it means they can limit the supply to always make sure that its products are scarce enough to warrant a higher price tag. Now, there's quite a bit that I want to talk about when it comes to Louis Vuitton. One of the things I want to do is jump into their investors presentation, which is pretty long, but I want to show you a few key points. And of course, I want to jump into my automated ticker data spreadsheets as well. But something that I have to point out that's really interesting about this company is there has been a ton of insider buying over the past year, and especially in the past couple of months alone. Every green dot you see on this chart is representing when an insider bought more shares of Louis Vuitton over the past year, and the red dot is when insiders have sold shares. And there's an old Peter Lynch quote that says this: "Insiders might sell their shares for any number of reasons, but they buy them for only one: they think that the price will rise." So when I see this level of insider buying, it definitely gives me a lot of confidence. And later in the video, when we look at the shareholder breakdown, it's going to give you even more confidence. Before we dig into the investors presentation, let's go ahead and start digging into the dividend metrics for this company. And like always, if you'd like to be able to download any of my spreadsheets and also get access to the ticker data add-on in Google Sheets that allows you to automatically import stock financials straight into your spreadsheet, then you can head over to tickerdata.com at the link in the description. But let's go ahead and come up here and plug in the stock ticker for Louis Vuitton. And you can see all of this data is going to automatically load in. Now, the starting dividend yield for this company is sitting at about 1.82%. So this is a lower yielding company. Now, as a dividend growth investor, anytime I buy a stock that has a lower starting dividend yield, I do want to see high levels of dividend growth. And if we come over here and look at the 10-year dividend compounded annual growth rate, it's sitting at about 13.94, which is very good. In the 5-year, even better at about 15.12%. So the dividend payments have been growing at a very high rate. And in fact, if we come down here and look at the yearly dividend payments for this company, we can see in 2014, it looks like they're paying out about $3.78. And as of right now, about $13.96. Now, one thing I do want to point out though, the dividend payments have fluctuated just a little bit. We can see in 2020, they did bring that dividend payment down just a little bit, which I'm really not a huge fan of, but overall, the dividend growth has been really good. Now, this is a company that's based out of France, and something we have to understand about European companies is a lot of the times these companies will either pay out dividends once every year or semi-annually, and Louis Vuitton is actually a company that pays dividends semi-annually, so you really only get 2 payments every single year. Also, because this is an international stock, make sure you understand the tax implications based on where you're living. Now, if we keep moving forward, we can see the dividend growth has been backed by free cash flow growth. 10-year free cash flow CAGR of 13.5 and 5-year of 12.43%. Something that I always say is that if you want your portfolio to be a dividend growth machine, you have to make sure that the holdings in the portfolio are free cash flow growth machines. Again, you want that dividend growth to be backed by free cash flow growth, otherwise the dividend growth won't be sustainable. And if you look at the free cash flow growth for this company over the past decade, it's pretty impressive. In 2013, free cash flow is sitting close to about $3 billion, and in 2023, it's all the way up to about $10.6 billion. Now, in 2021, they reached a peak. Free cash flow is about $15.4 billion, and over the past couple of years, it has trended slightly downward, but overall, I do continue to expect to see growth. Now, if you look at the free cash flow payout ratio over time, again, in 2021, it got as low as about 22 to 23% due to the high levels of free cash flow, but in the past couple of years, it's climbed up all the way to about 59%, which, to be honest, is actually a little bit higher than I'd like to see it for this company, but if they can continue to grow free cash flow at a high rate, it's not something that I'm really concerned about. But again, I don't want to see this go much higher. Now, if we go ahead and jump over to the investor's presentation, you can see it's a big one, 172 pages, and I went through this entire thing, and there's a few things that I want to point out in particular. First off, let's go ahead and jump over to the 19th slide. One of the things we have to understand about Louis Vuitton is they have a massive international presence. As of right now, they're operating in 81 different countries and have around 6,097 different stores. If we scroll down, we can look at revenue by region and revenue by business group. This may come as a surprise to a lot of people, but the largest market for Louis Vuitton is actually in Asia. And again, this is excluding Japan. Japan is its own market here. But Asia makes up 31% of the revenue for Louis Vuitton as of 2023, with the US coming in second at about 25%. And when it comes to operating in Asia, China is a very large market. In fact, a website called ChinaDaily.com recently put out an article about China's love affair with luxury goods and how it's boosting the growth for Louis Vuitton. And one of the key quotes from this article is that Louis Vuitton, one of the oldest fashion houses under LVMH, continues to captivate Chinese consumers with its blend of tradition and modernity. Chinese consumers value brands with strong tradition and history, preferring luxury items that are durable and timeless. Louis Vuitton has invested heavily in the China market and has shown its commitment to the Chinese consumer over time. And because of this, it has become integrated with the local cultural ecosystem and localized. So again, Asia is currently the largest market, and China is a huge focus for this company, but there's still a lot of potential growth in this market, especially as the middle class starts to grow in the Asia markets. Now, other than Asia and the US, we can see Europe, excluding France, makes up about 17% of their revenue, France about 8%, keep in mind again this is where they were founded, and then we have Japan at 7% and other markets at about 12%. Now, if we look at the revenue by business group, keep in mind again, there's a lot of different operations this company is doing. They have selective retailing and other activities at about 21%, watches and jewelry at 13%, perfumes and cosmetics at 9%, wines and spirit at 8%, and then we have the big one, fashion and leather goods at 49%. That is a large chunk of the company. Now, if we jump all the way over to the 162nd slide on this investor's presentation, there's something listed here that I think in the case of Louis Vuitton is actually pretty important to point out. If we zoom in, we can see the shareholder structure as of December of 2023. 7.1% of shares are held by individuals, 6.5% by French institutional investors, 37.3% by foreign institutional investors, 0.5% by treasury stock, but then we have 48.6% by the Arnault family group. Now, why is this a big deal? Well, what history and data has told us is that companies with skin in the game typically outperform the market. And that's exactly what is happening here with Louis Vuitton. It should give you a lot of confidence to see that the Arnault family group still owns the majority of shares in this company. And keep in mind, there's also still a lot of insider buying, so we can still see the founder, Bernard Arnault. He's still making a lot of insider purchases, especially in the past couple of months alone. And then if we look at this little cliff note here, we can see when it comes to voting rights, the Arnault family group still has 64.3% of the voting rights. And then the last slide I want to look at is page 164. We've already touched on revenue by region. We can see, yes, the number of stores is increasing, revenue is increasing, and then profit from recurring operations, this is also increasing. I love predictability from recurring operations. But one thing I want to point out is how revenue by business group is changing. If we look at this compared to 2022, we can see wines and spirit did see a decrease. It was down by about 7%. But look at these other business groups. We have fashion and leather goods up 9%. Perfumes and cosmetics up 7%, watches and jewelry up 3%, and then selective retailing up 20%, so overall up by about 9%. Let's go ahead and jump over to my stock screener to get a better look at some of these key metrics. Again, we'll come up here, plug in LVMHF and hit enter, and that data will automatically load in. Now we can see metrics like earnings per share, top line metrics like revenue per share and free cash flow per share have all grown pretty rapidly over the past decade. In fact, revenue per share is at about $58 in 2013, and in 2023 it jumped up all the way to $172. So it's pretty much 3x'd over the past decade. We can see shares outstanding has been staying pretty stagnant for the most part. Debt to assets has climbed just a little bit, but it's still at a pretty low level, so this really isn't a concern whatsoever. And then something I really like is return on invested capital has been pretty consistently at around 15% since 2017. Now there is an exception in 2020, but obviously a lot of companies struggled during that time period, but overall I'm pretty happy with this. Now we jump over to the profitability tab, you're gonna see something I really like about Louis Vuitton. Now when we think about retailers, a lot of the times those aren't companies that typically have very good profit margins, but that's definitely not the case for Louis Vuitton due to the luxury goods that they're selling. Look at the gross profit ratio for this company. The 10-year average is sitting at 66.23%. they're able to sell their goods at a very high price point, much higher than the cost it takes to make these goods. If we look at it in 2023, the gross profit ratio was sitting at 68.8%, which is even a little bit of an increase from that 10-year average. And if we look at the gross profit ratio over time, we can see it's been very steadily in that 66 to 67% range, and I love seeing a steady gross profit ratio, especially when it's this high. And we already touched on revenue per share, but we can see organic revenue growth has exploded over the past decade as well, and got as high as around $86 billion in 2023. So that 10-year revenue CAGR is sitting at 11.5%, and the 10-year net income CAGR at 16%. There's a lot to like about the company from a profitability standpoint. If we glance at the company's balance sheet metrics, everything seems to be pretty healthy. We already touched on the debt to assets ratio over time. It's climbed just a little bit over the last few years, but it's still in a very healthy range, nothing I'm concerned about. And the current ratio is currently sitting at about 1.32. Keep in mind, this is total current assets divided by total current liabilities, so it helps us better understand how easily the company can meet its short-term obligations. Seems like there's nothing to be concerned about here either. If we glance at return on tangible assets and return on equity, all pretty impressive metrics. So with all this being said, we have to ask ourselves, is Louis Vuitton trading at $765 per share a good stock to consider buying? To answer that, let's go ahead and jump into my stock valuation spreadsheet and dig into this. I've already plugged in the stock ticker, so the data has loaded in. One of the things we can see is the company has a beta of about 0.99, so the volatility should follow very closely to that of the market. Now, the first valuation we're going to look at is going to be Graham's valuation. And to perform this valuation, we can see the formula we're going to use here. Basically, it's going to give us a valuation based on the current earnings per share, the growth rate projection, and current market conditions based off the current yield on AAA corporate bonds. Now, to pull an estimated earnings per share, we can use the ticker data function. We'll come over here, select Louis Vuitton, select estimated earnings per share, and then we want it for 2024, and we'll plug that in. And we can see it's coming in at about $34.10. So we'll go ahead and plug this in here. And we can see based on a growth rate projection of about 16, and after plugging in the current yield on AAA corporate bonds, we come to an intrinsic value of $687.43, which is actually a little bit lower than the current trading price. Next, if we jump over to our discounted cash flow analysis, this values a company based on how much free cash flow they're going to produce in the future. And you can see again, we're going with a relatively high growth rate projection for Louis Vuitton of about 16%. So after projecting the future free cash flows, finding the present value of those future free cash flows and adding them together, we add the company's cash and cash equivalents, subtract out the total debt to get their equity value, divide by shares outstanding, and we come to a DCF price per share of $815.21. Now, typically the next valuation we look at is the multiples valuation, but I really don't feel that there's a lot of great comparables for Louis Vuitton, so we're actually not going to use it in this scenario. Instead, we're going to go ahead and go straight to our dividend discount model. And this values a company based on how much they pay out in dividends and how much that dividend will be increasing in the future. You can see over the past 2 years, the dividend growth rates have been pretty good. So moving forward, I'm projecting a dividend growth rate of 7% and a discount rate of 8.5%. This gives us a dividend discount model price per share of $995.81. So when we jump over to our output tab, we can see the three different valuations that we use. We have Grams at $687, DCF at $815, and dividend discount model at $995.81. And when we average these three together, we come to an intrinsic value of $832.82. Now, the current trading price is about $765, which is a little over 8% lower than the intrinsic value that we found. So with a 10% margin of safety, looks like the acceptable buy price is about $750 per share, which is pretty close to that current share price. Now, keep in mind, Graham's valuation is being driven down quite a bit by current market conditions and the current yield on AAA corporate bonds. Now, when I originally added this company to my portfolio, they were trading at about $710 per share in January of 2024. But it looks like they've come down quite a bit to an attractive valuation again, and insiders at Louis Vuitton seem to agree with me. So go ahead and let me know what you think of Louis Vuitton in the comments down below if you plan on buying or selling, or simply putting it on your watch list. And like always, if you'd like to be able to download any of my spreadsheets and also get access to the ticker data add-on in Google Sheets that allows you to automatically import stock financials straight into your spreadsheet, then you can head over to tickerdata.com at the link in the description. So with all that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.